Welcome to part two. Welcome to part two of our video, right? Risk management. So right now we are talking about what? Proper lot size, right? So you must give the market a chance to breathe, right? What do we mean by this? Let me show you. Right? If you have a $10 account and then you risk with 0.01 lot size, what are you doing? You are saying, I am reducing noise. There is what we call noise in the market, right? It's what we call noise. You are reducing the rate of pullbacks. Pullbacks, right? I will explain this. And what we call the retracements from the market. Reason is, okay, if you enter, right? Let's say you have a double top, right? And then you sell, right? Your actual account is how much? It's a $20, for example, right? This is your actual account. You are risking with, you are using 0.01, right? So in this way, what are you saying? You are saying, if I use 0.01 lot size with a $20 account, I am avoiding what the market can do, of which we call it what? Noise. What the market can do is, you entered right here for a sell, right? It's possible the market can go to your profit and then goes back to do what? To retest the resistance level for the second time. Okay, so what are you saying? You are saying, if you use 0.05, you must ask yourself, if this happens, if the market creates retracements, right, or pullbacks, will your account handle the noise of going on an opposite direction, or the pressure of the market, right? So if you sell from here, the market goes to your direction, right? And then all of a sudden, it creates a pullback or a retracement, goes back on an opposite direction. If the market goes on a loss, will your $20 account handle the pressure of 0.05 lot size? Will it handle the loss, or is it going to blow your account? That's the question you must ask yourself. That is why it's very simple. It's very wise for us to risk with the amount that is lesser than the actual account, or the actual amount in the account. Reason is, if you risk with 0.05, you are risking with more than what you have. You are risking with $50, you are risking with $30, you are risking with $40 when you use 0.05. So it's possible that with only 2 candles of 1 hour in an opposite direction, using a 0.05 for $20, you can blow your account immediately. Okay, but if you're using 0.01, yes, you can run on a loss, but it's highly impossible for you to blow your account. It can create those pullbacks, which is noise, and then from there, after it retests the resistance level, then it can go back to your direction. You are still running on a what? On profit. Why? Because you are using a proper lot size for your account. You're using a small lot size that your account can handle, that your account can balance. But if you use 0.10, right? Or let's say, yes, 0.10, what are you doing? You are risking more than your actual account. This is a small account, remember. The problem is, we want to make money quick. We want to make $1 million in a day. We want to make $1 million with only $20. We want to change $20 to $1,000 within hours, within a minute, within a day, right? Of which this can take days to grow it from $20. Why? Because we have to use proper risk management, proper lot size. You have to risk with the amount that you're willing to lose. Okay? Risk with the amount that you are willing to lose all the time. Don't risk with the amount that you're not willing to lose. Okay? So in simple scenario, what I can say is, or what I can give you light on relating the lot size, right? It's 0.01, for example. I will just make a quick example that I always come across. There's a question that my students are always asking me, right? Those who are new, who didn't know anything about the lot size, right? So let's say we have a $50, right, in your account. Listen to this, right? And then all of my students, let's say I have 5 students in the group. I give out Nasdaq signal, say, okay, right now we have a breakout of the market just broke the resistance structure, meaning that the market is going on a bullish movement. So we are going to take a buy. Then we buy Nasdaq on a New York session, of course, right? All of my traders or all of my students will have an actual account of $50, all of them. Or let's say I personally fund their accounts individually and say, okay, let's trade Nasdaq, let's buy Nasdaq, all of us, right? The difference is, the reason why they won't make the same money is because of the lot size. But although they have the same actual account with the same signal given by the same mentor or given by the same trader, at the same time, all of us are going to open positions, all of us. The difference is, and the question that I always get is, but why after you send a signal, somebody made $100, somebody made $40, somebody made $120, somebody made $50. Why? But we are in the same group. I always advise them, I tell them, the difference is you get the same signal, yes, at the same time, same pair, same instructions, same take profit, same stop loss. But the difference is the risk that each and every trader is willing to take at the same time. You know, that's the risk. That's the difference. Okay. So there will be a trader who will say, okay, fine. Today I can see that there's a nice opportunity for $50. I'm going for a 0.01. Then he makes let's say this one will make $20 profit, right? And then this one makes $40 profit. This one makes $60 profit. Just making an example. This one makes $80. This one makes $100. Now they will ask me, the first student made 20, second 40, right? The question will be, but you gave us the same signal and we all traded with an actual account of $50. But what did we do wrong? The difference is the lot size, right? So in conclusion, looking into this is, what you can say is, there is no way that you will make more money than the one who's using a higher lot size. So if you made $10 here, this one will make double 0.01. This one will make triple this $10. This one will make 4 times this $10. This one will make 5 times this $10. That's how simple and easy we can understand the lot size. So the higher the lot size, the more chances of making more money than the one who's using a lower lot size. That is the only difference. But yes, we are using the same signals, we are using the same mentorship and everything. The same strategy, the same entry, take profit, stop loss. But the difference is this. It depends on how much money you are risking with. Are you risking 2 times your account? Are you risking 3 times your account, 4 times your account, or 5 times your account? And also remember, same thing applies. If you make double this, if you are on the wrong side of the market, you are going to lose double your account. Yeah, if you use 0.03, you are going to lose triple times your account. This one you are going to lose 4 times your account. This one you are going to use 5 times your account because you are on the wrong side of the market. You understand? So if you use a lot size of 0.01, right, and then you use the other one uses a lot size of 0.05, it simply means that trader is going to lose more than the one of 0.01. Why? The lot size is too big. So make sure that you use a lot size that your account can balance, that your account can handle. I hope that made sense. Lot size. So make sure you use a proper lot size. Okay. So for an account that is less than $50, always use 0.01, right? And then the one that is above $60, 80, you can use 0.02, right? And then that's how you grow your account. Now, number 4, we are moving. Do not, please, do not be greedy, guys. Do not be greedy. Reason is, each and every day, there's about $10 million or more than million of dollars that is made each and every day in the market. Do you know how much money is being made each and every day in the market? About $4 million, more than that. Let's say for example, right? Let's say for example, in the market, I think now it's more than this, because this time was when I started trading. I think it was 4 years ago. It was $4 million daily, not weekly or daily, in the market each and every day. The money that is being generated in the market each and every day. So in this $4 million, how much are you going to make? What's your cut? How much are you willing to make in this $4 million? Okay? So the thing is, you can't be greedy and want to take all of this $4 million in the market. It's highly impossible, unfortunately. So if you do this, you are being greedy, right? You have an account of $100 or let's say $1,000. Then you say, no man, I want to make a $4 million with only $1,000. What are you doing? You are being greedy. You are being greedy. So each and every time, just take your slice, get out of the market. Take your bread, get out of the market. Take your cut. Let me write it here. Take your cut. And take your cut. Be excited with your cut. Okay? Now, how to handle the pressure of being greedy? Right? How to handle the pressure of being greedy? Always be positive. Be positive with your losses. Be positive with your wins. Okay? Always. If you make $10, you made something, right? Take it, be excited, motivate yourself. Remember, for example, if you use 0.01, then you make $10 in a trade. Imagine if you used 0.05. Imagine if you use 0.10. You are going to make more than this $10. So that is why you must be positive. Reason is because the market went on your direction. You are growing, but slowly. So be positive with small wins. Small wins, be positive. Be positive with your small losses. Be positive with your high losses. Be positive always. Always. Okay? Be positive and then take your cut. Take your cut. Right? Whatever you are making, take it. Accept your losses. Remember, guys, if you don't accept losing, you will not grow. The following day, you will make the same mistake. So in order for us not to fall for the same mistake again, you have to make sure that you learn from the mistake that you made today, so that if it comes again tomorrow, you know what to do. But if you don't accept the losses, you are going to be greedy. You know what you're going to do? After you lose on Nasdaq, you are going to rush to gold just to recover the money that you've lost on Nasdaq. And guess what? On gold, you are going to lose more. Let me make an example. This is what we tend to do as traders. I know. I've been doing this also before I knew this scenario, right? Let's say you have $50 on your account. You see a good opportunity. You know what you're going to do? You lose, right, your $20, right? You are left with how much? You are left with your $30 on Nasdaq. Next 100. You lost on Nasdaq earlier or in the London session, for example, right? Now we are on the New York session. You lost $30. You lost $20. You are now on $30. What are you going to do? you're gonna rush to trade gold. Now you are not using a positive mindset of trading, but now you are using a positive mindset of gambling, right? Yes, you are in the right direction to make money with gambling, but you are on the wrong side of the market. Reason is because now you are putting what we call emotions. You are trading with emotions. The emotions are, I want to make that $20 back immediately. You didn't accept the loss. Now what you're going to do is you're going to change the mindset of trading and take the mindset of gambling. Now you are gambling. You are no longer trading. Reason is because you want to return this $20. As long as you want to return what you lost, you are no longer trading. You are gambling. That's gambling. That's gambling. That's the difference between trading and gambling. A trader loses, comes back, trade with what he has, hoping to make at least more than what he has, not willing to return the losses. Recovery is for recovering the account, not recovering the losses. How are you going to recover the losses? It's when you make profit, right? But when you want to return the losses that you've made today or yesterday, the mentality is not of trading, but the mentality now is of gambling. That's the difference between a trader and a gambler. A trader knows, when I lose, it's fine. I will make it. That one I lost, I don't even think about it. It's gone. The market took it. So I'm going to take my card also the next time. Right? That's the positive mentality. But a gambler will always be in full control with a full spirit of, I want to make that money now that I've lost. Let's recover it. Let's recover the losses. Let's recover. Then you start losing even more. The problem is, with that mentality, right? You will go to gold with your $30. Yes, see. You're just saying, I hope to make that $20 back. Right? Now, what are you going to do is, you are not going to use lot size of 0.01 because you want to make $20 quick. You are going to use at least 0.05 so that in a minute, 2 minutes, 5 minutes, if it gets to $20, you close. Now you are on your $50. You are fine again. You are excited. That's the problem. And guess what? You use a lot size of 0.05. You end up losing even that $30. At the end of the day, your account is what? It's blown. You've just blown your account just like that. Right? What are you being? You are being greedy. If you lose $20, forget about that $20. It's gone. Focus on the $30 that you are having. It's possible that as a trader, not a gambler, what we do is we know I've lost $20 today. It's possible that with my $30 tomorrow, I will see another opportunity, or the following day or so, I will see another opportunity, or even today, I will see another opportunity on another pair and make $30 extra. You understand? Or make $60 extra. So the mentality, remember, the market is a mentality thing. It's a state of mind. It always controls your mind. It plays with your mind all the time. It plays with your emotions all the time. You know, so your mentality must always be strong to handle the losses, to handle the pressure, to handle the noise in the market. Don't feel bad when you lose money. It's part of the process. Just know how you lost that money so that the following day you will make more than that. Okay? So always don't be greedy. If you lose, you lose. If you make it, you make it. There's other traders, you know what they will do? Let me show you what we'd like to do. We sell here, right? And then you have a daily target of $20. Your take profit was here when the market started moving. But now, because you can see there's a good opportunity of a sell or a trend, you remove your take profit now. You put it on another position. This is being greedy. Already you have reached your daily target. Take your card, get out of the market, go to another pair or something. You've made your profit. Why should you move your stop loss? Why? Your take profit. Why? Why should you move your take profit to another position? Rather than that, what you can do is, after the market passes your $20, you can just move your stop loss to profit. At least, that is how you will minimize your losses. That is how you will minimize your losses. Right? Because if you don't do this, the market can retrace, go back on an opposite direction, you end up losing your money. Okay? So always know how to protect your account. Be positive at all times. Whether you are losing, whether you are winning, be positive. Whether you are blowing accounts, be positive. Right now, let's get to the fourth one. Protect your account or protect your trades. Simple. Protecting your trades. Right? Protecting your trades is when you use what we call proper risk management, obviously, proper lot size. And then when you are on profit, the main thing is this. I want to share with you today. If we sell there, right? Same thing I just said now. And you are on profit, right? Let's say you have hit your target of $20, right? For you not to be greedy, you can just move your stop loss below, right? In profit. This is how we protect our trades. Always, always, always make sure that when you have at least reached a certain amount that will make you excited, always move your stop loss to profit, so that even if the market can retrace, go back on an opposite direction, it will hit your stop loss, but it will hit your stop loss on a profit. Okay? So that's how you will protect your trade. Always make sure that if you are on a good position, if you are on good wins, always move your stop loss to profit. In this case, you are protecting your trades. Okay? Again, the other way how to trade, to protect your trade, is when we do what we call scaling in the market. I know you have seen this part where traders open like 5 positions at the same time. Right? So for you to avoid this, right, you can open a trade here. If you know that the market is going to trend for a sell, right, and then the market can create a pullback, goes on your what, on your direction, you can open another trade, right, and then it will go create a pullback, go on to your direction, open another trade, right. And then the only way you can do this is when now your first trade is on profit and protected by the stop loss on profit. Then you can open another trade. The second trade, make sure also, before you open the third trade, make sure the stop loss is on profit, protected by the, right? Make sure that your trade is on profit, protected by the stop loss. And then, before you open the fourth trade, make sure that the stop loss is on profit, right? So that even if the market can retrace, it can hit all your stop losses but on profit, rather than losing 5 positions within a minute or 5 positions within an hour, right? In this way, we know that we are safe. We are protecting our trades. Always, you must know how to protect your trade, right? For us to know if we get a pullback, whatever the market will do, we know we are on a good position. You know, the thing is, we don't know if the market is going to hit our take profit there or not. We don't know how long will the market sell. That we don't know. We don't know how long will the market buy, right? But for us to be safe, we always use what we call moving your stop loss. This is what we always do in our signals, right? Especially when we are trading NASDAQ, when we are trading US30. Reason is because of the spread and the volatility that they come with. So for us to always be safe, we do what? We move our stop loss to profit every time when we trade. Okay? When you make money, make sure that you protect your money. Make sure that you protect your asset. Make sure that you protect your trade. Remember, trading is like a business. You are growing it each and every day. You don't make it in an overnight. That is why it's very difficult, and that is why not everyone is trading, right? There is a lot of money in the market, but not everyone is trading. Not everyone is making money. Why? Because this is a business. You have to grow it each and every day. And a lot of us traders, we don't have what? We don't have patience. Okay? Remember to scale in, right? We call it scaling in. Scaling in the market, right? Scaling in is when you open these positions, but making sure that the stop loss is protecting. And then always protect your trades by the stop loss. Stop loss protected. Okay, so in this way, right, if now your trade is protected by the stop loss, you can just hold it until it hits the take profit. or you can just hold it until you achieve your daily target. You understand? So you can make the market very simple, but it's not simple. It takes all of this to make one, right? So if you balance, if you excel on this thing, it simply means you are going to make more money, right? So this is how you will be consistent. Yes, I hope this information played a huge role, and I hope it increased your knowledge, and it brought light where there was darkness, or it brought light where there was confusion, right? So yeah, I'm still going through the comments, and I will make sure that I will come to the comments and get to answer individually, right? I know there are many, but I will make sure that I get in. Thank you very much for the support. Thank you for subscribing. Yes, I received a question last week that do I offer online classes? Yes, I do offer online classes. We have weekly. I don't know if I can remove this quick. Let me just remove this quick. It takes practice to excel in those things. Make sure that you are going to practice, right? So we offer what we call weekly Zoom online sessions, right? So it's from Monday until Friday. Okay, so each and every day we have students from all over the world, mostly from USA. So what we do is we offer the sessions on from Monday to Friday, okay, once in a day, right, for individually, right? So it depends on which day you will be available from Monday up until Friday. Our sessions are provided on Zoom meeting, right? It's one-on-one. It's one-on-one sessions. It's one-on-one sessions, right? It's one-on-one sessions. And then from there we have what we call them private weekend sessions. The reason why we also do weekend sessions is because there are other traders who are employed, right? There are those who are working, and during the week they don't get time to be in the market, right? So for weekend sessions, you will get sessions twice in a day, meaning that you will get your sessions on Saturday and on Sunday, right? So if you are activated to our private weekend sessions, simply means you're going to be learning on Saturday and Sunday at the same time, right? So yes, we do offer online sessions. For what I've been saying and for what I've been previously saying, it's the same thing. So we cover up all the topics in the market, right? So there are traders who are experienced, but there's a lot of misunderstanding that they get from the market. So we challenge those kind of concepts, we face those kind of concepts, we go through those topics, you know. So I think one-on-one is the best way to see what's happening in the market. And also we do one-on-one sessions for also the softwares that you are using, right, the tools that you are using. And also, yes, we do have a signal group, right, of which this is where we trade Nasdaq and other currency pairs and other indices like SPS 500, right, and silver also we trade it, and there are other currencies that we trade. And also, yes, we do have a mentorship group. A mentorship group is where we analyze the market. It's where we give guidance to the market. It's where we give tools like PDFs and other learning structures, you know. So yeah, this is all the concept that I'm using. And I know this question have been coming a lot of times. A lot of traders and a lot of mentors have been asking me if I do offer one-on-one sessions weekly. Do I have signals? Do I have mentorship? Yes, I do provide all of the details. And also I will leave my link of my Telegram group, right? The link is there on my YouTube settings, my YouTube channel, right? So yes, I hope this information played a huge role, and I can't wait for the next session, right? So yes, traders, we do offer one-on-one sessions from traders from all over the world. Also, this is the question again I've received, like, do you teach or do you have classes for traders specifically from a certain place, or do you do it abroad? Yes, we do it abroad. We have all traders from New York. Shout out to New York, shout out to you, to USA, right? Shout out also to Dubai. I think I have like 3 from Dubai. Such amazing people there. And also we have Africa, we have Nigeria, we have Botswana, we have Zimbabwe. Shout out to all the places. And then we have, what is this place? I always get it wrong. We have Monaco, and then we have South Africa. Yes, shout out to South Africa also. We have South Africa, and then yes, we have like places, a lot of places from all over the world. So we have students from different places, and we can also schedule the time, because the time zone is not the same. So we all know what to do with the time difference. So we always schedule that. So each and every Sunday we give out a schedule for traders, or for one-on-one students for that week, so that you know what time are you going to be learning in which day, right? So yeah, we make things very easy. And yes, thank you for the support, and also thank you for the positive comments. Those who are making money with my information, those who are making money with our settings, our guidelines and everything, shout out to you. Keep it well, keep improving, and make sure that you always follow the concept, okay? And then also, yeah, the breakout strategy. Thank you guys for those who are using it consistently and we are making profits each and every day. I've been receiving a lot of comments about the breakout strategy. Thank you very much. And also those who are in the group. Yes, I hope this information will circulate and will play a huge role. Thank you very much, and have a blessed week.